Hi, welcome to Market Alert for Monday the 23rd of October 2017. So on Friday we saw the pound managing to move higher and over 100 points from the low to the high, and then the market becoming sideways as normal there. So a bit of volatility back in the pound, which is good. And in the daily chart you can see how the market came off the 76% retracement area there as well, and now moving back to the upside. The only thing in the way is the 20 bar average at the moment. Also, if prices do continue to move to the upside, there will be some resistance at this level here as well, which takes into account not only the resistance that you can see there, but also the 76% back to the upside at 132.77. News for today, what have we got? Absolutely nothing. There's no news out today, none whatsoever, so the market's going to make its own direction. So that's going to be a case of the market continuing to move to the upside for the Dow, which we'll have a look at now. So this is the daily chart, and once again we've got a new all-time high in place on the overnight. I'll just draw that one in for you. You can see that we've already put on 356 points since closing above the 23,000 level there. And on Friday you saw the market moving higher once more. We started off fairly quiet, market sideways for the first part of the session, then all of a sudden things started to move, and we see the market moving to the upside and then reverting back to being quiet at the end. But it seems at the moment this market's making its move in the middle part of the session as well, so it's either doing it on the overnight or just in what we would normally call the quiet part of the trading session. So once again, an interesting change in how things are actually panning out with the Dow and how they're moving at the moment. So here we see the market moving higher on the overnight initially, and at the moment it's just finding resistance at the 23,050 level at the moment. Right, let's have a quick look at the implied volatility, see where that's trading. There's a very interesting picture developing here. Just before we do that, let's just go back to the daily chart. Just want to show you something and remind you we've got this market moving to the upside. We've had a bit of volume over the last couple of days as the market bounced. Well, they bought the market back here and then moved higher on Friday. A bit of an increase here. You could say that was new buying in the market, and it's likely to be those afraid of missing out. Let me show you this in the implied volatility. So on Friday we see the market moving higher, which is here. You can see we've got the up move there, and down here in the implied volatility we've got also the volatility moving higher. We've gone to 807 from 7.86, and that's strange when you think you put 162 points on the underlying market, and then the implied volatility is also moving higher as well. That's unprecedented. That shouldn't be the case. There is a situation here where it would be a divergence based upon the fact that normally they move in the opposite direction, and here they're actually moving together. So there's something strange going on that the option sellers are quite nervous about, and that's no doubt due in part to the fact that the market has just moved vertically, and it's over a year now since we had more than a 5% correction in this market. So once again there's going to be some concern by the option sellers that this thing's going to explode at some point, and they don't want to be caught being exposed to unlimited losses on this sort of trade either. So I'm not surprised that things are starting to move as they are at the moment. Right, that will do it for this one. I will report in if there's anything to report about, but it could be fairly quiet and one directional given that there is no economic news or any central bankers being wheeled out today. They did start to get busy during the week. Draghi is going to announce some sort of tapering as well, as I spoke of before. We'll see what happens. Right, that'll do it for this one. As ever, thanks for watching. See you in the next one.